Hey, welcome back. We've got another update here on my dividend investing portfolio. So if you're new to the channel, what I do is I've just been investing in Canadian stocks using Wealthsimple Trade for about the last 8 or 9 months now. And I'm just kind of tracking along every step of the way and seeing exactly what's going on with my sector breakdown, all of my holdings, and all of the dividends that I get and stuff like that. So the stock value of my portfolio right now is sitting around $16,830. And I've received a total of $197 in dividends since I started. And also, when you include that with the appreciation of the stock price, I'm up $1,764, which is awesome. That's 11.5%. Very happy about that. My portfolio average yield is 3.99%. I'm always trying to target at least 4%. That's a personal preference of mine. Everyone has different goals. But actually it has gone up recently because some of the stock prices that are in my portfolio have fallen. So this always changes based on the amount that the companies are actually paying and the current price of each stock. But either way, I'm looking at $672 of passive income from my dividends, which is great. This is all in my tax-free savings account, so I get all of that, and what I'm doing is I'm always reinvesting that back in as we go. You can see even here, I think the last deposit that I made was $250, but there's a few dividends and stuff left over, so I just lump it in with every purchase going forward, and and just slowly get that snowball effect going on and compounding my account. So anyways, looking at the portfolio today, I think I've been looking at 2 stocks that I want to buy. We can take a quick look in here and check the progress. Again, we're still down on all of the renewable energy stocks. This one, and down here at the bottom, a couple more renewable companies. I'm not too worried about that stuff. This is like, I'm just going to watch these fall even more. Like, if they start falling below 15% or something, I might buy in. Otherwise, I'm not rushing to buy this dip because I still think that these guys are, they might be overpriced a little bit still. And anyways, I'm in no rush because they're making up pretty big portions of my portfolio anyways. So what I'm looking at today is to pick up 2 other stocks that are not utility companies. The first one that I'm looking at here is TELUS. When we take a look at their Sparkline, they are basically just consistently growing their stock price, and they're also consistently growing their dividend. For example, if you actually go to their website to investor relations, you can come here and they say, in May 2019, TELUS announced its intention to target ongoing semi-annual dividend increases, with the annual increase in the range of 7 to 10% from 2020 through to the end of 2022. So that's awesome. When we look at the stock, they're currently paying a yield of 4.78%, but they're just agreeing to compound or to increase that basically every year. And they've been doing that for a long time. So this is already a high yield, and they're committed to increasing it over time. So even with the shares that I buy today, I'm going to get a certain amount of estimated annual income from that. But next year, it will be 7 to 10% higher, on those shares that I bought today, which is fantastic. That's pretty much the goal here. And then the other company that I was looking at is a REIT, and we're looking here at Smart Centers, which is right here. These guys just pay a massive yield of 6.3% almost, and when we come here, we can take a look at their Sparkline, which is right here. They're pretty much recovered, I'd say, from last year. Maybe a little bit of room left, but they're basically sitting at the value where they were about 2.5 years ago, something like that. But just looking here at this huge yield, it doesn't have the same growth potential. For example, here we can see they're paying 0.154 each month. And if you go back of like 2.5 years, it was a little bit of an increase just there. And then that continues, and then you just get another small increase about 5 years ago. So their payouts are like pretty flat, but I'm pretty sure like 6%, over 6% is pretty huge anyways compared to my portfolio average, which is 4%. So I'm definitely okay with that. So yeah, let's jump into Wealthsimple Trade, which is the broker that I use to buy and sell stocks in Canada. If you're in Canada, it's an awesome option. It's like a no-fee trading app, so you can buy 1 or 2 stocks at a time, and you're not going to pay like a $5 or a $10 commission or something like that. And so often what I'm doing, because I'm only buying a few stocks at a time, I'm just not paying those fees. And those fees, if you consider it by percentage of like a small purchase, can actually make up a big expense. So that's what I really like about Wealthsimple Trade. And if you'd like to try it, there's a link in the description below where you can also get $10 just for giving it a go and see if you like it. But anyways, let's jump right into this, and we'll pick up TELUS first. So TELUS, we're going for the TSX. We're going to do a market buy here of about 5 shares, so it should be about $132. That's great. We'll go and buy that at a market order. And then also the next one that I want to get is Smart Centers. So it's SRU. And these guys are at about $29.40, and I'm just going to wait for this the cash in my account to bump up, because 5% is usually held for a few seconds after you purchase stocks. So there we go. That was literally like 10 seconds waiting, and it's bumped up. And so now with these, I want to pick up. Let's do 4. So that's going to be about $117. I think that should be enough. I'm going to pick that at a market buy. All right. So let's jump back into the spreadsheet and go log these transactions in the transactions tab. So here I'm just recording every single transaction that I do, and I just make sure that I put in the price that I paid actually with a market buy, and I get that from the notifications in Wealthsimple Trade. And once that's all in, I'll just come back to the summary page and see what has updated. And if you remember before, we were sitting at a value of about $672 in passive annual income from dividends, and now we're up to $686. So that's an increase of like $14 per year, which might not seem like a lot, but I'm doing this every week at least, sometimes twice a week as well. And so my passive income is just like climbing and climbing and climbing. And also because of, for example, buying like the TELUS shares, those dividends are going to naturally grow over time as well. So you can imagine, like, if this was all TELUS shares, or like this whole thing was growing at 7% per year, then if I even did nothing and deposited no more into this account, then this annual income would be like 7% higher next year. And that would actually be like another $50 per year based on that growth. Now, not all of my dividends are growing at that speed. Of course, you just saw like Smart Centers is pretty much flat. But for the ones that are growing a lot, you'll see this number naturally increasing, which is great. And then I'm also planning to deposit more money anyways, and really just like get this thing into this uncontrollable snowball, and then eventually be able to live off this or something. Much later in life, or even just withdraw some money if I need to, or pay for certain things. We'll see. So anyways, guys, if you watched this far, thank you very much. If you do like this video and like these updates, drop a like on the video. And yeah, well, thanks for watching, and I'll see you in the comments and in the next video.